Hello everybody, and thank you all for attending today's Business Solution webinar. My name is Donald Plain, and this is another informative video brought to you by the Chapter Group. This is video one of 3 videos, and we're confident that you will find these videos informative and educational, so let's get right to it. Today we're going to discuss 2 very important topics. We're going to teach you the importance of forming a corporation or LLC and educate you on how to obtain business capital for your company. I would like to start today by educating all of you on why it is important to form a corporation or LLC. Now, there are 3 main types of entities that can be used to form a business name. You have a sole proprietor or DBA, you have an LLC or limited liability company, and you have a corporation. Again, these are the 3 main entities being used by businesses today. Now, we know that small business owners are the cornerstone for success in the United States of America. And we also know that over 100,000 new businesses are being formed in our country every single month. For example, in 2009, 12,000 businesses per month were being started in the state of California alone. And we know that about 75% of those new businesses formed a corporation or an LLC. Now, ladies and gentlemen, the reason why so many business owners are forming a corporation or an LLC is because of the benefits you receive. Now, there are 5 main benefits of forming a business entity. The benefits of forming a corporation or LLC are protecting your personal assets through liability protection. The second would be annual tax benefit savings. Of course, you will greatly reduce your chances of being audited by the IRS. And you will develop a professional identity for your clients, as well as get the ability to obtain loans that are not attached to your personal credit. Now let's talk about business protection. As a sole proprietor or DBA, you are 100% liable for all of your business debt, as well as your personal assets, such as your home, personal bank accounts, credit cards, auto loans, etc. This is the primary reason why most businesses form a corporation or LLC. By forming a corporation or LLC, you will now completely separate your personal assets from your business assets. So in case your business ever gets sued, you fall delinquent on your loans, creditors are hounding you, none of your personal assets are associated with your business anymore. Now, by incorporating, you will receive great tax benefits. For instance, as a sole proprietor, or DBA, you will be required to pay self-employment tax, right, which is currently at 15.3%. Now, if you incorporate your business, only the salary you pay yourself is subject to self-employment tax. So depending on your situation, you may be able to save as much as 50% on your tax bill. But of course, consult with your local CPA to get more details. Now, I know we can all dread being audited by the IRS, and I'm quite confident that you would like to reduce the chances of being audited by the IRS every year. Fact, 65% of sole proprietors or DBAs every year will be more likely to file incorrect tax returns and tend to underreport revenue and overreport deductions. It is for these reasons the IRS audited a higher percentage of sole proprietors and DBAs than corporations in tax year 2008. In tax year 2008, as a sole proprietor, you stood a 1 in 32 chance of being audited. But on the other hand, for a corporation or an LLC, the chances of being audited were only 1 in every 124. Now, we all know one of the first steps of being a successful business owner is to distinguish yourself from the competition. You can do that by developing your personal identity. By adding INC or LLC after your business name, you will be establishing a professional identity and increased credibility.